Yo, yo, yo! What's going on, guys? Today is episode 2 of Our Eyes on Base DeFi. Today we are joined with my wonderful co-host Crypto Noah as we dive into learning about yield farming, specifically on Base. Crypto Noah, how are you today, my friend?
Oh man, I'm good. Just wanted to hop on here and touch base on what's going on in the DeFi world. See what we can do with our pools from last episode. I actually hopped into them as well. They're printing out pretty good. So I'm sure you had a pretty good week. But yeah, man, all is well. I got on my Coinbase developer platform shirt. I got the December.
Dude, you're flexing the merch. I love it.
Yeah, man, it's a one of one right here. It's my first time wearing it, man, for the show. So,
well, dude,
yeah.
you're looking fly. I'm also wearing some crypto merch. This is this is a little bit old school. It's a throwback to 2023, the Blockdown conference in Portugal. Also, a bunch of sponsors on the back. But
Nice.
I swear, bro, I don't know about you, but my wardrobe is becoming increasingly a crypto merch shopping store.
Bro, I have more crypto shirts than any other shirts. And like I have 3 big stacks about this high in my closet, all crypto shirts. And I took out all my other shirts and I put them on this rack that I had to get outside of my closet because I couldn't fit anymore. So,
Oh man. That's a flex right there. That's a crypto flex.
dude, I went to ETH Denver because that's the best place to go for the merch. Bro, I still have half of it I haven't even wore yet because I went to ETH Denver, then went to Europe for 3 months and I just got back. So now I'm just now able to start wearing my stuff. So yeah, you guys are gonna see some heat on the show.
Okay, well, dude, I'll try and keep up. I must say, so I've never been to ETH Denver, and in fact, maybe 2 weeks ago, just before our first show, in fact, was the first time I've been across the pond for an event, and that was
the pond. Is that what you guys call
it? Yeah, bro. I took the long trip across the pond over to your sunny shores. And yeah, I got me some merch. I was actually on my fireside booth. I managed to squeeze this into my hand luggage, bring it back. I'm like, that's some quality. This is merch to me. Also I've got all these autographs from the base homies. So I was like, I can't leave that behind. But yeah,
Right.
I definitely got some nice merch. So it's gonna be battle of the wardrobes on this show, that's for sure.
For sure. I got so much, man. So much. And we're not going to stop going to events. So it's only going to grow.
Can't stop, won't stop.
Yes, sir. Let's get into it, man. So I wanted to start off by saying, guys, if you're not on base doing any kind of DeFi or yield farming, or at least like starting the process of researching, I want to make it clear right now as to why you should. Okay, so this is DeFi Llama, and it shows the total value locked in all of DeFi, right? It's only $150 billion locked in DeFi, okay? We haven't even got to the previous cycle all-time high, which was what, 180 billion or something like that. Why am I talking about this? Well, within all of the DeFi tokens, most of that is obviously on Ethereum. Base is an Ethereum layer 2. And if we look at it, Base is the number 1 layer 2 in terms of total value lock. They have $4.7 billion locked on it.
That pie chart, it showed Ethereum having more than 50% of market share. Is that including the L2's?
No.
I didn't see that.
And even with it, like, even if you look at optimism, because Base is built on OP, it also doesn't take into account. So it's like, it doesn't take into account the whole thing. Because if that were the case, Ethereum will have a much larger market share because, most of these layer 2s are built on ETH, right? This is the important thing. It's $150 billion in total value locked on DeFi right now. And imagine if you were able to like provide liquidity for the S&P 500 when it was $150 billion market cap. Yeah, you would have made a lot of money had you just buy and held the S&P, but you also would have made a lot of money if you were able to be a market maker and accumulate fees from all of the volume from it going to 150 to multi-trillions of dollars in market cap, right? Billions of dollars in fees would have been made. I'm not saying you'll make billions of dollars in fees. I mean, you can. It depends on your strategy and how much money you have to allocate and your time frame.
Mm-hmm.
But if you think of this $150 billion on here, think of it like as a mountaintop, right? Liquidity likes to find a home where it can get the best yield from a good risk adjusted basis. So the highest yield without worrying about like any kind of smart contract risk or anything like that. So now where does Base fall into that just kind of idea? Well, you have all these other L2's, right? And L1's, you have Avalanche, you have Sui, you have Arbitrum. Base is obviously Coinbase's layer 2. This is the Base network's first major bull market. And if we want to look at a case study, it shows that whenever an exchange launches their own chain, it does really, really well. And the reason why is because they have hundreds of millions of users that are already using the exchange. And the exchange, like Binance Smart Chain, they made it real easy to bridge and use BNB just because, you know, it was their chain. So this is the same kind of thing with Base. Coinbase has always aimed to be the white knight of crypto, the regulatory compliant company or arm. So now I believe that Base is going to be not just the top L2 of this cycle, but to be honest, like, you know, as time goes along, I definitely think Base is going to be thriving 10, 20 years from now. Coinbase is the easiest way for people to onboard onto crypto. Coinbase makes it really easy to bridge over to Base and use Base. So easy that if you bridge from, you know, your Coinbase to Ethereum chain or Arbitrum, you get charged fees. But if you bridge over to Base, it's free. A lot of people don't understand what that means. They're just like, oh, this is free. This is Base. It sounds like Coinbase. So why not just do this? So guys, it's going to be a lot of liquidity flowing onto Base. A lot of people are already buying altcoins on Base. So by you providing liquidity, this is like selling shovels during a gold rush. The gold is the altcoins that people are going to speculate on, the Base altcoins that people are going to try to buy to get the next 100x. And just like when people went west to find gold, not everyone found it. But everyone had to buy a shovel just to be able to play the game of trying to dig holes to find gold. So now by providing liquidity, you're literally selling shovels. You may not get the next 100x, but by providing the liquidity and allowing people to speculate, you're getting fees every time they're buying on the America's and really the world's #1 exchange. This is their first bull market where they're launching a chain, and institutional investors look at Coinbase as trustworthy. As you know, or if you didn't know, they are the custodian for most of the Bitcoin and Ethereum ETFs. So like BlackRock trusts Coinbase with their money. And then in regards to the Base chain, if there's some kind of hack or anything like that, Coinbase has plenty of money to make people whole. And you can't say that about the other L2s. And this is how institutional investors think. So yeah, for those reasons, you definitely want to be on Base because it's going to be a lot of people buying and selling and building. So if we can provide liquidity and make money from those fees, that's going to be a game changer, guys. And that's why we're here on Base.
Mic drop, brother. Honestly, I think there was so much alpha just unpacked there. I mean, we look back to earlier this year. Do you remember when there was the Coinbase hack? And I think they wanted a ransom for $20 million. And Brian Armstrong, like man on fire. Like this was when I was like, okay, actually, he's head honcho for a reason. It was almost a Liam Neeson Taken speech.
I don't know who you are. I don't know what you want. If you're looking for ransom, I can tell you I don't have money. But what I do have are a very particular set of skills. Skills I've acquired over a very long career. Skills that make me a nightmare for people like you. If you let my daughter go now, that'll be the end of it. I will not look for you. I will not pursue you. But if you don't, I will look for you. I will find you. And I will kill you.
It was, we're not going to give you, we don't deal with terrorists. Instead, what we're going to do is we're going to put up a $20 million bounty to find you. And it was like, literally, everyone's like, what the, like $20 million bounty? Oh, I mean, these guys, they play for keeps. And, you know, when you say about the fact that they're trusted by these large institutions, I mean, these guys are right in the heart of it. They're, you know, going to the White House summits anytime there's new crypto legislation, Brian's attending or Jesse Pollack's attending. They're at the forefront for this, and for a reason. I mean, there's a reason why they were in the crosshairs with the SEC. There's a reason why they swatted that away. They've jumped through every compliant regulatory loophole, every hurdle they try and put in front of them, they're like, well, actually, if you look at everything, all the information you've given us, we are as compliant as is possible with the murky waters. So yeah, I 100% agree. I mean, that's the whole reason why I created Basejunkie, because I feel like the writing is on the wall. You know, as the world comes on chain, and as institutions are choosing Coinbase, and as they've created the Everything app, which is still not out for everybody, it's the base app. Over 1 million people are on the waiting list. The appetite is there. The floodgates are opening. And one thing I really enjoyed about last week, and just diving into learning a bit more about the yield farming, is that, yes, you're right. It's not a strike gold kind of moment, because everyone in the trenches sort of ingrains in us, like, oh yeah, let's all shoot for that 100x. Everybody loves that because you see it on the timeline, because everybody posts their dubs, but nobody posts their L's. So you think, okay, I've got to be in the trenches. I've got to make 100x to make it in crypto. Nah, that's not the way, because that's not the only way anyway, because high risk, high reward, and lots of people will just crash and burn. But the yield farming strategy, you know, allocating a part of your portfolio to slow burn, the slow supplying the shovels, up or down volatility, it doesn't really matter, because at the end of the day, you're collecting fees. This is something that I neglected for a large part of this cycle, and that's really why I was really excited when we spoke about starting this show.
Yeah, this is and the last thing is that, dude, Coinbase is the only public crypto company. Well, actually, Circle went public, so not anymore, but they were the first. This is a L2 of an American public company that's a part of the S&P 500. Now everyone, all these 401ks that hold S&P 500 in their portfolio, they're holding Coinbase. So I just want everyone to understand that it's like playing in the early days of the internet, but being able to own a piece of it and being able to participate in a piece of it. So it's not to be taken lightly.
Absolutely. And to be honest, you know, when Coinbase joined the S&P 500, it's not like they just squeaked their way in, just gone to number 500. I mean, they made an entrance. They were like 190th on entry. It's like, whoa, these guys are here to stay. These guys are here for keeps.
Dude, if you look back on the S&P 500, like before the 90s tech boom, most of the companies in the S&P before that were industrial companies, like companies that made steel, banks, things like that.
Mm-hmm.
After the 90s, and even to this day, the top companies on the S&P 500 are all tech companies. So I'm willing to put my money and say that I would say, like, within the next probably 10 years or more, the top companies on the S&P 500 are going to be blockchain-based companies. They're either going to be new blockchain-based companies like Coinbase, or they're going to be companies that pivot and offer the optimal blockchain and crypto services. That could be Apple, that could be Microsoft, but blockchain services and offerings are going to be the alpha for companies in the short to long-term future.
I would agree with that. I think blockchain is, I don't say future-proof, because obviously there's speculation on quantum computers, like what's like the security of everything. Like once quantum computers happens, it's like what does society look like then? And then of course there's the AI advancements are at such a rapid rate, whether it's physical AI emergence, or just, you know, the super intelligence, agentic intelligence. We are moving this way. I think I personally view blockchain as, I think it's going to have a fundamental role in security in the future, especially when deep fake. I mean, we've already seen some crazy deep fakes that it looks like, unless you're looking closely, you'll be fooled 9 times out of 10. And as AI is able to mimic voices and video, how can we trust our own eyes? How can we trust our own ears? Like, without understanding what's a verified source? And the only way to verify a source really will be an immutable, verifiable origin, and that's blockchain.
Indubitably, sire. That's just it. All right, man. Well, that's the soup and salad. Let myself here. Let's get into the meat and potatoes, man. So last week we hopped into a couple pools. I know we were texting back and forth during the week. You had some questions, so let's give the audience our thoughts on everything. and kind of look at our case study and see how everything's going.
So I have Revert ready to go. I also have Aerodrome.
And then your deck screener as well. Let's look at your range and see what's going on. And let's look at how much money you made. And then we're going to talk about how we go about managing these pools. All
right. So this is one thing I wanted to. So I'm going to show the retake. Sorry, not the retake. Reverts.
Retake coming soon, guys.
So first of all, I started with just shy of $1,000. So we are down in terms of total asset value. But I mean, yeah, we'd love to get your thoughts on that. I mean, I believe I know what that is. I mean, market prices. This one is now fallen out of range.
Is that your super tight one that you had? No, that's your.
No, that's the wider one. We came to the just tipped out the bottom side, but you know, I left it out of here so we can change the range, fix that after the fact, and then here, oof, we are on the very cusp of that range, but it's still printing for me. So I've got another $6. I have to admit, I clicked on these once before. So here we are, total fees. So from $1,000.
Hit expand.
Where's expand all?
No. Or that. Yeah, you can do that. That works. So you've been in that. So 4 days and 15 hours, you rebalanced that one.
Mm-hmm.
Okay. And then scroll up a little bit. Okay. So you took out $4.40.
So this is uncollected fees. Uncollected fees, $4.40.
Okay. So you got in there 4 days ago and haven't claimed. Okay. So now let's open up your ranges and see how things are looking. And that'll give us a good picture. So you want to pull up your deck screener and you want to hit your watch list. Remember, because you got it there. So you want to clear that watch list all the way on the left up. There you go. So this is your range for ZORA USDC. Remember, because you got USD clicked. All right. So now this is ZORA ETH. So they're both out of range. So now what we're going to do is we're going to move our ranges first, and then we're going to rebalance this thing live. You want to pull that thing down. And I actually got into a pool as well. Let me see what my ranges are. And then, okay.
Do you want to share screen?
No, I'm gonna have you share it so that way we can show like the whole process.
Okay.
So for ZORA USD, my bottom is 0.05176. It's pretty much at previous support. Almost.
All right.
And then the top is going to be 0.1227.
For you, would you classify this as a tighter range?
So if I go ZORA USDC and what's tight for ZORA ETH is two different tights. First off, before I answer, let me measure this here. Computer is moving a little slow. Okay, so that's 143% wide. So for a volatile stable pair, which is ZORA USDC, it's like moderate because you want to give the volatile stable room to run as paired against USDC. USDC is always going to be stable. So it's not too wide. And right now, I'm in this one. I got into it yesterday, 20 hours ago. It's paying 256% APR. I got in there with $4,000. I'm up $139 on principal, and I got $25 in fees. Okay, so that's not bad. So
that's nice. I think earning $25 in a day on that adds up
for just $4,000. That's not bad. And now, what we teach inside of our community, guys, because you're probably thinking like, oh, $25. One, you have compound interest. So inside of our community, we essentially teach you how to run your portfolio like a market maker, right? And if you look at the portfolios of market makers, look at Citadel, look at Goldman Sachs, look at Deutsche Bank, they don't use all their capital for market making. Yield farming is just another word for market making. Depositing money on traditional exchanges, just like we're doing with ZORA and ETH, they'll do this for Apple and USDC or USD, Apple and Tesla, like the stock pairs that we buy. They don't use their whole portfolio for that. They'll have a certain percentage of their portfolio that they use for market making. They'll have another percentage of their portfolio that they have in cash, and they have another percentage of their portfolio that they have in assets, and they rebalance on a consistent basis. And rebalancing forces you, because this is what we're about to do, Rebalancing forces you to buy low and sell high. I'll give you an example. Let's say you want 40% of your portfolio to be in ETH, and ETH does a 2x. And now that 40% of your portfolio in ETH represents, let's say, 70%. So now when you go to rebalance at the end of the month or the end of the quarter, whatever your rebalancing schedule is, you have to get back down to that 40%. So it's going to force you to sell ETH at a profit. Another example, if, let's say, same thing, your balance target is 40%, ETH drops 20%, and now you're at 28% ETH. You need to get back up to your 30. Well, guess what? Now you have to buy ETH at a discount. So when you continue to do that over years, it literally, no matter how you slice it, as long as you're not buying BS assets, it forces you to win. There's no way around it. This is how institutional investors manage their portfolio. And this is why they win. You know, you have to have failure to plan is a plan to fail. So now going back to this, when I look at my rewards, it's 25 bucks, right? I'm expecting ZORA to do a 10 to 50x from here. And I'm going to be coming out with a fundamental analysis on ZORA within the next week that I'll share. But the thing is, you know, people might be asking, well, why don't I just buy ZORA and not get into the pool? Like, why wouldn't Basejunkie just take his $1,000 and buy ZORA? Well, like I said, you want to have an asset portion, and that part will be included in his asset portion. So when the price of ZORA goes up, he has his sell targets to sell. But for your market making portion, we have no idea when ZORA is going to pump. It could pump in January. So from now, September, we can be accumulating ZORA for 4 months. So instead of having $1,000 that you just throw in there and you're just waiting, you know, he has this other portion of ZORA that he's just sitting there. And then now from his fees, what I do is I'll take half of my fees. I'll use it to buy things that I want to buy. So like in this case, ZORA and ETH. If I get, let's say I get $100 in fees, right? And rewards. I'll take the $100, withdraw it, $50, split it up, 25 ZORA, 25 ETH, boom. And I put the other $50 back into my pool to compound. So now instead of having $1,000, I have $1,050. And instead of getting, you know, 256% APR on $1,000, I'm getting 256% APR on $1,050. And this is when compound interest comes into play. And compound interest, you know, it's that hockey stick growth. Our brain has a hard time conceptualizing compound interest. It's the whole question. Would you rather have $1 million or a penny doubled every day for 30 days? You take the $1 million, you just missed out on an additional $4 million because compound interest gets crazy real fast. But on like the first couple weeks, it's just like, oh, it's not worth it. But then like around the 25th, 30th day, 25th-ish day, it starts to get really, really crazy. So having that said, you have your new ranges there, right? That we just put on there? Yeah, you want to share your screen? I'm going to walk you through how to rebalance. So first, you know, you only have a little bit of reward. So normally I would claim the rewards and use them, but since it's only like $4, we can just compound them back in. Okay, so go back to your deck screener. And then, okay, so we got the new ranges here. All right, so now pull up another window and type in aperture, APER.finance. And guys, launch app. When you're taking this, another important thing is wallet separation. When you're taking your rewards, so that you don't like mixing things up, I take my ZORA and I'll send it to another wallet. And then that other wallet, it never touches any kind of smart contracts. I just use it for send and receive. So I'll take my ZORA, boom, send it, my ZORA, my ETH, send it to another wallet. And when I'm ready to sell, I'll send it back to this wallet and then I'll connect it to, you know, Uniswap or Aerodrome and then do the swap, right? Especially if it's a hot wallet. Just have a wallet that never touched any smart contracts. Don't put your private keys online. That way there's no chance of you being hacked unless it's brute force. But, you know, that's very, very unlikely. So that way it just makes it easier and you're being safe. So go ahead and connect your wallet there. Okay. And now over on the top where it says liquidity positions. So Aperture Finance is a AI rebalancing tool. So on here, you can set up parameters that says if this, then that. So like if it's out of range for this amount of time, rebalance me here. If it hits this price, rearrange me here. If it hits this price, get me out of the market. So you can kind of use this as a limit order tool almost. So like, let's say you're in ZORA USDC and you think the price of ZORA is going to get to $5. Right now it's at 19 cents. You can have your range from 19 cents to $1 and use this tool and say, as soon as it hits 19 cents, get me out of the market. So the whole way up, you're accumulating fees. You get to the top of the range. Remember, it's a limit order for the underperforming asset. So now you're in 100% USDC on principal, but it's going to be higher because the price rose, and then you're out with your fees. Okay. All right. So now let's do your out of range one first. So ZORA ETH. So go back to your deck screener because we gotta set your new ranges for ZORA ETH.
So quick question though. So right now it says unclaimed fees $5.20, and over on Revert it says unclaimed fees $4.40. What's that differential?
I bet if you refresh Revert, it'll show it. There you go.
There we have it.
Yeah. Yeah, this is Revert is not a live tool. You always have to refresh it to get the current data. So now, so go back to deck screener and we're gonna do your ranges for ZORA ETH. And then you're gonna hit WETH at the top. All right. So now it looks like you moved it already.
I don't remember, man. I think
it's all good. So the range that I have for ZORA ETH is
a bit wider than this, wasn't it?
Here, I'm gonna let you know right now. It's a bit more narrow actually, because remember, it's easier to stay in range on these volatile pools because ZORA and ETH will likely move in tandem, even though we think ZORA is going to outperform ETH, not as much as it's going to outperform USDC. You know what I mean?
Mm-hmm.
So this range that I have here is only 67% wide, and it is from 0.00001434.
All right, so 1434.
And then the top one is 0.00002396.
2396. Oh,
yeah,
okay,
so it's a bit more narrow. All right, so now that you have that, I don't know if you want to like write that down or take a picture so that way when you go to Aperture, you don't have to go back and forth. Click that. Now, guys, I'm gonna just explain to you why this is really good. If we were not using this tool right now, we would have to. He's out of range towards. What are you out of range toward the bottom? So that means. ETH. So if it's go back to your chart. Okay, so this is ZORA wrapped ETH. So if this chart's going up, ZORA is outperforming ETH. If it's going down, ETH is outperforming ZORA. So if ETH is the overperformer, that means he's going to be in 100% ZORA out of range. All right. So now go back to your Aperture. Here's the thing you have to keep in mind. If it weren't for this tool right now, he would have to exit all of his liquidity in 100% ZORA because he's out of range to the downside. He would have to do the math to calculate how much he needs, do a swap, and then do another transaction to insert it. So he's withdrawing, swapping, inserting. Now on Base, not a big deal because the fees are cheap, but on Mainnet, it adds up. Aperture does all these transactions in one, saving you time and money. The time part is because it does the math for you. You don't have to calculate. You just put in your new ranges and it does it all for you. And you're doing one swap instead of three. So now you're going to hit rebalance right there. And also another thing to keep in mind, if you have unclaimed fees, it's going to automatically compound the fees back into it as well. So if you want to rebalance on here, but you also want to keep your fees and like use them to buy whatever, claim your fees first from Aerodrome or Uniswap, whatever DEX you're on, and then rebalance. All right, so now you're going to scroll down. And remember, guys, you want to make sure it's showing correctly. So we had the multiple zeros, and it's showing how many shares of ETH you can get for ZORA. You don't want it to show how many shares of ZORA you can get for one ETH, because if you put in those numbers, it'll be incorrect like we talked about last week. So now, Basejunkie, you can go ahead and put in your minimum right there.
1429.
And delete everything else behind it.
2392. I was just looking at this while you were talking, like the balancing, because obviously this one came out of range, so it was 100% ZORA, 0% WETH, and here we're 83 and 17. But look down here, 99.1. We are hanging on by a thread.
Yeah, but that's okay. You're still. It doesn't matter how close you get to the bottom or to the top. As long as you're in range, you're making a yield. Your yield amount doesn't change when you get closer or farther from the bottom, just so you guys know. So now you want to hit your rebalance now and then sign And I made a video about this project. The cool thing I like about Aperture is that it has the same smart contract risk as Uniswap, right? They don't have any authority to confirm rebalance. They don't have any authority to withdraw tokens to like their own wallets or anything like that. The only way that this project can mess up is if Uniswap has its own problem. So that I like. Safe. So boom,
So-
dude, you rebalance. And now you're in range. How easy
So-
was that?
That was crazy easy. I mean, honestly, like finding the right tools and having the right walkthrough process, that simplified it so much.
Yep. So now rebalancing doesn't take a long time. And my rule is if it's out of range for more than 6 hours, I go on here and rebalance. And the fee that Aperture charges is really, really small. And also if you don't want to use Aperture, because sometimes they might raise their fees in the future. They used to be high, but the community kind of got on them and they lowered them back down. But if you want to
When you say about fees, do you know what the fees are?
Yeah. So go to what is it? Do you want to rebalance your ZORA USDC?
Yeah. So okay.
So go back. You already
so-
put the on the chart, right? On deck screener, right? I think you already moved them.
Yeah. So I guess my question really is, and this is actually one that I DM'd you during the week because I made a really tight band. Maybe it was plus minus 10% each way. So it was a 20% window. It was generating the highest fees, higher than the other ones. I think that might actually be this other ZORA WEF one.
Yeah. Pull up on revert. Let's talk about it.
Okay, so look, this one has $374. It's on 100%, 170% here on 250, and then less than $200, $183, a tight window, 561% APR. And if you look at yields, for $400 almost, I made about $5, and for $200, I've made 14.
Mm-hmm.
So obviously, I've been fortunate that it haven't gone out of range on this one. This one's printing. That's a very nice APR. But in terms of rebalancing, like what are the fees that are involved with rebalancing, and at what point does it become less profitable to have a really tight range that is printing for several hours, and then you go out of range, and then you follow it again, you get out of range, you keep following it? Can that be a profitable strategy?
Absolutely. So the point where it becomes unprofitable is just if the fee that it costs to rebalance is higher than your yield. That's it. And for this one that you have here, 561%, it's $14 right now. You're not going to pay $14 to rebalance on base network. This was ETH mainnet, different story. When you do tight ranges, you want to have a higher principal. But that's the cool thing about L2's, smaller fees, faster execution. This is what they're built for. It's good that you have less money. Like that, the wider your range, the more money you put in because the lower the risk. And what you'll find is that, and this proves it, like let's say you have $1,000, you put $400 in the wide one, you put $300 in the narrow one, and then you put like $150 to $200 in the super tight one. You'll end up getting the same amount roughly in uncollected fees. Sometimes a higher fee will end up paying more, but that's good risk management because you don't want to put most of the money into the tight range pools and then you experience impermanent loss. So that's a good way to do it. You asked another question that I wanted to cover. What was it that you said?
The fees for Aperture?
No. We're gonna do that real quick first. You said, I remember when we got into the pool last week, and I meant to say something last week, but I forgot. You were like, I really want to just be in the ZORA ETH one because I don't want to hold USDC. Okay, so I want to talk about that. It's a mindset shift from that's thinking as a trader, thinking as a market maker is completely different. You're not thinking about capital gains. You're only thinking about cash flow. So in your asset portion of your portfolio, you're worried about what you're holding. Like I'd rather hold ETH than USDC, But when you're providing liquidity, you are providing liquidity for two assets or one asset, one currency that you know isn't going to go to zero, or at least have high conviction that isn't going to go to zero. and you're worried about the fees that you're generating, not so much what you're holding, because like right now, your principal went down $200 or so, okay? But we know we're in the bull market and that thing's gonna go up. As long as it's still printing you cash, you're good, because we know it's not gonna go to zero. It may go down to 700, but if you stay in range for years, not even years, if you just stay in range long term, it's gonna keep printing, and eventually you're gonna get to the point to where your yield is more than what you put in. And now, just like the goal when you're trading is to get into a risk-free trade, you buy something that goes up 3x, you take out your principal. Now it can go to zero, but you still came out with some profits. Same thing here. You want to get to the point to where what you've accumulated outpace what you originally put in, and then you're in risk-free liquidity positions. So that's how I like to think about it.
It's a good way to think about it, because at the end of the day, cash flow is king, and yeah, as long as these are printing, I think that's a very good point, because obviously we're doing this $1,000 challenge to see ideally number go up, but on week one the entire markets came down, so the principal came down, so the $1,000 is now $811. But are we looking here? Are these the total fees generated for the week?
Yes.
Okay.
And the only reason why he went out of range shortly after the show, and he purposely didn't rebalance, because we wanted to do it on stream. But had he rebalanced and like used my rule, like the six hours after, then he would have made a lot more money. So that's not a typical thing to where you just leave it out of range for a long time. We're doing this on the show so we can walk you guys through all of this. So don't look at these results and say, oh, it was only $20. It's just because we wanted to do this on air. Okay. So now go into your ZORA, go back to your deck screener. Okay, so we got our ranges there. Now you want to go back to aperture. And now I'm gonna show you guys a trick here. So now you want to input your range. You want to hit rebalance.
Rebalance, okay.
Yep. You have like extra. You can also hit like add liquidity and stuff here too. So now you want to input your range here.
So where is the add liquidity?
Oh, it was on the last page. So if you hit back, you see where it has add liquidity. Yeah, you can add more if you wanted to.
I mean, okay, I don't have USDC. I think I've got a little bit of ZORA, a little bit of ETH. Maybe I'll add that to the final WETH pool.
Okay. Yeah, I just wanted you guys to know the possibilities. So now this is a really good tool. So now I'm gonna show you guys another trick. So go ahead and put in your ranges.
So we're going down all the way down to here, right?
Yeah, let me make sure. So mine is 0.05176 on the bottom.
Mm-hmm.
And then 1227 on the top. And now click off 27, 1227. No, that's fine. It's just gonna, remember, it rounds you to the closest tick.
Right, yeah. Okay.
So scroll down here. All right, so now I want you to see the fees. Scroll down a little bit more.
That's the bottom.
That's the bottom. Okay, so where does it show the fees at? So okay, before we dive into that, if you didn't want to pay the fees, right? Because the math is the worst part. You could do this. Like, let's say you wanted to rebalance to ZORA USDC and you didn't want to pay the aperture fee, but you just wanted to know the math. So you can know like how much ZORA do I need? How much USDC that I need? So that way, when I get into this pool, I don't have any like leftover capital, right? You want to get it all in there. It shows you with this range, you would need 2,181 shares of ZORA and $96.67 in USDC. So you could, if you wanted to exit out of this, go on the deck, swap for those exact amounts, enter into the pool, and then boom. So that's just another trick for you guys. So now, does that make sense?
Yeah, 100%. I'm very curious as to what the fees are, because obviously they're providing a service, and if it's like,
so hit rebalance now, and we're going to look at the
rebalance now.
There we go. So you see the fees right here. Aperture fee is only 54 cents. So you're paying 54 cents plus gas. Gas is probably what, a couple more cents. So you're not even paying $1 for this.
All right, I can swing that. Yep.
And then confirm rebalance.
That's very interesting, in fact, because I think when I was doing the really tight range, I wanted to just keep just adjusting it, but because I'm playing with small amounts, you know, if what pool is paying me $8 or $10 in a week, you know, if I do that 5 times, then that's half the profit's gone.
Mm-hmm. Well, and then also here's another thing. When you want to be thinking long term about your profits as well. So like if you're taking half of your rewards and using them to buy Zora and send them to another wallet, let's say each time you claimed it was like $10, $10, $10, and you're just buying $5 of Zora here. Let's say you do that 5 times. That's $25 in Zora. If Zora does a 20x,
$500.
yeah. So boom, actually it was $500. You know what I mean? So it's just like you gotta. This isn't a yield farm. Isn't a get rich quick overnight. And this is how the institutions think. They use they have fees that they can claim through a dashboard from the liquidity that they provide on exchanges like Robinhood and Fidelity and all the exchanges that we use for stocks. And they use it to buy other assets too. And this is how they think about it. So they don't think of it as $500. They think about it as, where do I think this could go? And how much is it worth with that in mind?
All right, man. I think it's as we were saying before, having a part of the portfolio in different sectors, yield farming for the sideways days, have some assets for when it pumps. What's your thought on holding stables?
Always.
Yeah.
You shouldn't go. So you shouldn't go below 10% stables, right? Because, and this is actually biblical as well. And you don't have to be of a certain religion, but biblical principles work, right? So like the three tranches: cash, assets, and market making. Cash shines when prices are cheap, right? Because you can deploy them. You can deploy the cash to buy good cryptos at a discount. We never know when those days are going to happen. That's why they say save for a rainy day. We don't know when the rain's going to come. The assets shine when prices go up. You can sell them for more cash to deploy on discounts, and you can put the profits into liquidity pools to, increase your yield. But your yield farming is always shining because there's always volume. So yeah, you said liquidity provided for the sideways days, but also for the good days. This Zora ETH pool, we expect a 3x from ETH, right? Zora is definitely going to 3x as well. So if you have $1,000 in a Zora ETH pool, and they both go up 3x, you're still going to be in range. And if your principal is 1,000, now it's 3,000 because you did a 3x on principal. And you're also going to make a fuck ton of fees because it's going to be a lot of volume required, a lot of buying volume required for Zora to do a 3x and for ETH to do a 3x. So you're going to be up like in the green days, providing liquidity is good. Even in the red days, providing liquidity is good. But in the red days, like during a bear market, or bearish conditions, I should say, it's healthy to think longer term because your principal will drop because you're just going to give your range more room to go on the downside. So like, for example, throughout this whole here, let me share my screen here. We could probably wrap up. Let's say right here, right? This is November 2021 and we're in 2025. Okay. So let's say you provided liquidity from $5,000 because you're not going to get the exact top. Let's say your range was from 5K all the way down to here, 878K. So, and let's say you put 20 grand in there. As you're going down, you're buying the ETH dip, right? And your principal is dropping because remember, you're limit ordering ETH as it's the underperforming in an ETH USDC pool and ETH is dropping. Okay. So ETH dropped 81%. So you're down 81% in your principal, right? If you got 20K in there, you got what, like 3, 4, 5K, whatever it is. My ballpark math isn't the best. Okay, boom. Let's say you keep it there. Now, had you just been holding ETH and it went down 80% and it came back up to where it is now, you're back at break even. You're back at your 20K. But if you were providing liquidity and it dropped down 80%, remember, you're making fees in ETH and USDC as it's going down. You're making fees as it's chopping, way back down, fees again. And then you get back up to break even. Instead of holding 20K, if you were just holding ETH, you're going to be holding close to like 70K because of all the fees or more, depending on which ETH USDC pools you got in, because there's so many ETH USDC pools on so many different chains. So if you were in like the best pools, you would have made over 100K because you were in range for about 4 years, and now you got back up to break even. So you're break even in your principal, but you have profits because you made money in fees. That's the long-term thinking that really moves the needle on your net worth.
Yeah, to be honest, I think that's one of the most exciting parts of learning this, because obviously we feel very bullish right now. Everything's going up, and right now it's like learning the process, learning the, you know what, you have some generate some fees for cash flow and for building a bit of like padding the nest, because unfortunately, as we all know, anybody who's been around like anybody who's seen a bull market and a bear market knows how out of the blue it hits and how swift that punch is to your portfolio. And positioning yourself for when that time comes, and then to be generating fees through the bear market, I mean that's a game changer.
Yeah, man. And just going back to the whole time in the market versus trying to time the market thing. We have no ideas when the discount days are going to come. We have no ideas when the up days are going to come. We have no idea when the consolidation is going to come. And when it does come, how long it's going to last. So you really want to position your portfolio to optimize for all three conditions, right? Just like when you're hunting for fish, like we were talking about the wide and narrow ranges. When you're hunting for a whale, it can feed you for a whole season, and those are being in range for the big candle days, right? But you also have these small fish that you can catch, but you also want to store some because the fish could all swim somewhere. You might not catch any fish for a while. So the bear market is when everything gets really juicy because people pull their money out of DeFi because there's centralized bad actors, like when BlockFi and Celsius had their whole debacle. People pulled their money out of DeFi when there was no issues with DeFi. So the people who are still in during the bear market, dude, the yields in the bear market are insane. And the last thing I'll say is that, like you were saying, you don't know when it's going to hit. The bear market, the drops on the chart, they happen faster than up, like than the market going up. And the markets are also affected. I like to say the markets are affected by gravity. Like when you're looking at an uptrend, like, yeah, you see hockey sticks sometimes, but before that, there's usually like some buildup, right? There's some buildup. But when things drop, it falls like a rock, right? It's usually not like this. It's a drop. And if you I always like to say, when you look on a chart, you're looking at everyone's fear and greed, their emotions. Mm-hmm. And the desire for gain is much smaller than the fear of loss. And that's why the bear markets are a lot more wicked and sharp, because that gravity at the bottom just kind of falls out. So
just talk about the fear and greed. I haven't looked at that for a while. I do often like to check it out, but
dude, we're in fear territory. And the reason why this is good, I cover this on my macro video that I put out every week on the Know It Owls channel. So the reason why this is really good, the territory that we're in, is because, dude, markets are pumping and we're not even in greed mode. We got ETH hitting all-time high. We still haven't hit greed. We got the Federal Reserve about to lower rates, the United States Federal Reserve, wherever you're watching, about to lower rates. We have ETH Treasury, dude. I swear to God, man, I was like trying to watch, bless you. I was trying to find some good crypto videos to watch yesterday. All I can find is videos on ETH. I'm like, fuck, man, I'm tired of hearing about ETH. It's like, that's all everyone is talking about. So the fact that we have all of these high prices and bullish sentiment and like crypto laws passing in the US, and the crypto fear and greed index is still at a neutral, guys, that's really, really good. Because if this was like 2021 or any other cycle and all this stuff was happening, we'd be all the way in the green. So it just shows that we have a ways to go.
That's it, brother. I think that's a perfect way to wrap up the show. There's plenty of gas still in the tank, so position yourselves accordingly. This is the time to lock in. Crypto Noah, I appreciate the guidance, and for everybody tuning in. I hope you learned something today. We are going to be doing these shows every week as we document the journey, zero to hero, learning DeFi yield farming on Base. Crypto Noah, any final words?
No, you guys just click the link. He's going to repost this on his Twitter. I sent you the link for people to join our free community in Telegram. So when you post it on Twitter, just put that there. Guys, come join our free community. Come to one of our presentations. It's a lot of liquidity pools that we're in that's paying better than this one that we just showed you guys here. Like I said, we're doing our 49 Weeks to Freedom Challenge, where our goal is to help everyone reach 100K. Or if you're already at 100K, you can just extrapolate that up across what you have. So yeah, join our free community, subscribe to Crypto Noah and Know It Alls, continue to follow us on the journey. And yeah, we can't wait to see you guys back next week.
I love that. All right, so yeah, I will be posting, I'll retweet with the link to your community so people can learn more, get in touch. I'm actually going to jump over to Farcaster / the Base app to host Topi Tuesdays. Come vibe with the tribe on Fireside, the Web3 evolution of Twitter Spaces. It's a project I've been developing this past few weeks with some ETH Global Hackathon winners. Man, it's come together so nicely. So, Crypto Noah, if you want to come vibe with the tribe, come vibe with the Topis. We'll be doing that over on the Base app and on Farcaster if you don't yet have access to the Base app in about 5 minutes. So until then, we'll see you over there on those apps. And then if not, we'll see you next week for the next episode of Owl Eyes on Base DeFi.
Yes, sir. Come back next week so we can touch base again.
Sounds good. Stay based.
Stay based.